capital would be deployed, and what are the kind of startups that they would invest into, and what are the kind of mechanisms that they would provide to see how this capital can succeed, and then they could get a huge return on investments. So this is how, so when VCs go, and so VCs actually fundraise for the funds. So when a venture capital firm wants to open up a fund, they actually invite a lot of limited partners to actually go ahead and invest into that fund. And so it's not their capital, it's a managed capital. So VCs raise investments from LPs for a specific fund. So each VCs actually have different kinds of funds as well. And there is specific funds. And each fund has a lifespan of about 10 years. And this is important because a lot of them have this on their portfolio where they say, you know, we are VC firm and things like that. But they have actually deployed their capital. So if you're reaching out to such kind of VC firms, then it might be very late. So the best part about reaching out to these firms is in the early 3 or 4 years where they're actually deploying capital. And that's the peak time when they're actually going ahead and looking at a lot of startups. VC invests in about 20 to 40 startups in one fund. So a fund actually has about, on an average, 30 startups that they invest into. And the general partner is the architect and the face of the VC firm. So if you see a GP of the firm, he's the one who actually makes decisions on who they want to invest into. With the limited partners, there is an investment management committee, but predominantly the decision is of the general partner. And this general partner has years of experience in looking at how, in looking at gathering a deal flow, looking at how successful startups could be, entrepreneurs could be. And usually these general partners are actually have their own startups, or they have successfully exited their startups, or have been managing portfolios in the financial domain, and so they have the understanding of how startup works, and they can look at how return on investment. So he is more the operational arm of the VC, where he's actually deploying. So just to get into what types of limited partners exist, you have pension funds and corporate pension funds as well. You have economic development agencies, you have family offices and foundations. Recently, there are corporates that have also joined the bandwagon and are investing into funds. You have insurance companies, and you have wealth management companies, though wealth management companies consider this as a very, very risky portfolio. And so it's predominantly 5 to 10% of the overall wealth of any individual is actually invested into the VCs. And then you have sovereign wealth funds, and sovereign wealth funds in this region, in the Middle East, play a bigger role, and they actually invest into what we call as funds of funds. And then you have universities and endowments, and this is becoming a norm now, where a lot of universities, similar to how Crescent has its own innovation council, they actually universities set aside amount, and then it's actually invested through a VC fund. So VC fund promises a return for the LPs of about 5x to 10x, which is like returns. And this is pretty much what the LPs get out of this engagement. Then you have the general partners. General partners are investment professionals who are vested with responsibility of making decisions with respect to ventures that are required to be invested. They get so they get percentage of the fund as a management fee to actually go ahead and invest. So the more they invest into startups, the more they make money. So that's their incentive. Once the LP's funds are returned, and this is the mechanism. So for example, if it's $100 million fund, and you're going ahead and deploying capital as a GP, once the return of 100 million has happened, whatever additional returns that the VC fund gets for that particular fund, the GP actually gets 20% of profit out of that, and this is considered carry. And these are two terms that are very predominantly relevant for a GP. So they talk about cash and they talk about carry. So let's look at how the fund actually works. So there's a fund administrator, usually a legal firm. And if a VC firm, that's a GP, actually says a yes to a startup, um, the VC firm pitches to the LP through an investment management committee. And the LPs actually have not yet given money, but they have allocated money. So there's a special purpose vehicle, which is a company, a shell company or a holding company, where the limited partner has actually parked the money, and the VC firm actually makes a call for investing into that particular startup. Now, all this has to go through a legal framework, so it's pretty much the same jurisdiction where the special purpose vehicle exists. So just to give you an example of where these jurisdiction are or geographies are, it's more Cayman Islands, Mauritius, British Virgin Island. In the US, it's Delaware. You have one in Singapore. And you have one here in the Middle East called Abu Dhabi Global Markets. These are tax havens, and usually what happens is investors specifically want to be associated where there is no taxes involved. So they have their own accounts that they have open. And so the VC fund actually calls for the money. And once the VC fund receives that money, and then they deploy into that particular startup, that particular amount. So if you're a startup and you're looking for VC funding, you need to be legally as well set up. It's not the operational company or an LLC. This is a holding company. So it's a little bit different. How does this mechanism work in terms of money that the VC deploy? So consider about $100 million as a VC fund. The actual fund of deploying into the startups is about 50 to 80 million. The rest of the amount gets into the cost that they have to pay for the GP and for the administration that happens through this legal firm. The last, specifically on the VC business model, is the investment thesis. And this is very important. And if you're a startup founder or in the startup space, do look at where the investor wants to invest into, and then reach out to them. So a venture capital investment thesis is an overall set of beliefs a fund uses to determine whether or not to make a particular investment. A fund's investment thesis provides a written guideline of when to take an action and why. So some of the highlights of the investment thesis are: what stage of startup do the VCs deploy capital? So it could be early stage, they have Series A, Series B. Some of these terms are much more generic. So they might say, no, we are looking at, when you have an MVP or early revenue, or when you're looking at scaling up. And some of them might have revenue milestones that exist where they would come in and then invest. And then what sectors or themes of interest? So not all VCs invest into all kinds of technology companies. So there are themes that they invest into. Some of them are also focused on specific business models. So some of the VCs say we do only business to business kind of business models, startups that we invest into. Some of them are B2C focused. Some of them are B2G focused, if they are affiliated with government and government entities. And also they focus on what type of founders. So currently with the talk around equality and things like that, there are specific VC funds that are focused on specific marginalized, communities and things like that. So this is pretty much what the investment thesis encapsulates. And so whenever you're a startup and you're looking at actually going ahead and invest, looking at funding, so look at all these elements even before you're reaching out to them. So a takeaway for different sections of the audience. So for a startup founder, not all VCs are applicable to your startup. Do your due diligence of discussing with VC portfolio companies, the companies that the VCs have already invested into, to understand the support and funding mechanism. When a VC announces a fund, the first 3 years are when they deploy the capital. For startup ecosystem enablers, understand the VC vision and see how you could be a support mechanism, either to enable deal flow, advisory role, or into helping the portfolio companies to grow through business development. And for those who are exploring here, VCs are a risky asset class, but really rewarding. To see startups grow and achieve its vision through the capital is much more rewarding. And mostly the startup founders who exit out of companies start up their own small VC fund, and they actually go ahead and invest. It somewhere becomes like an addiction to actually look at helping out and growing these startups as well. So again, I would like to gauge the participant interactions to say, has anyone fundraised from a VC? And Mr. Pervez, if you could help me get those answers.
Yeah, I think we are just seeing the responses in the chat window. Nisha, can you see?
Yeah, we are getting more of no's.
Okay. Interesting. Okay.
Yeah.
So, so if you're looking at VCs, I think it's much more an informative webinar then. So hopefully you gain a lot, and I'm open for you to reach out to me. So I'll share my contacts as well later on. So let's move on. So this was the first section, which was much more focused on how the VCs work. And let's move to the Middle East venture capital and the landscapes. So predominantly, there are n number of venture capital firms, but the predominant ones are Beko Capital, WAMDA, and MEVP. And all these three have multiple funds that they have fundraised and deployed capital. They have their own focus, which is Beko Capital is more early stage, but they are early stage for them is a definition of you almost have an MVP and you're early into revenues. Then you have WAMDA Capital, which focuses, so Beko has, in terms of theme, Beko is much more open, so that any technology startup can actually go ahead and reach out to them. WAMDA Capital is much more focused on Series A. Some of the predominant e-commerce startups have been backed by WAMDA. WAMDA also has its say in Aramax, and the founder of Aramax, Fadi Gandour, is actually also the principal at WAMDA. And this is one of the VC firms that has a lot more that they do in terms of community development as well. So they have a lot of advisory and mentoring things that they do, a lot of programs that they run, apart from just being capital VC fund. And then you have MEVP, and this is much more a mature investment, and they are partnered with the government of UAE in rolling out funds, and they focus specifically on service-based companies that are looking at this region. So they understand the business model here in the region is most of the companies are most of the startups are looking at how service can actually become technology can help services being provided really well. So they aren't focusing on any blockchain or AI or mobility-based startup. They're much more realistic. They know what works in the region, and they specifically focus on things that come out of this region and invest. All the three have their base in the MENA region, which is Middle East and North Africa, and they have been investing in length and breadth across these geographies. Then you have the Middle East Venture Capital Association. And the interesting part about this Venture Capital Association being formed is that a lot of the deal flow has now started to see a lead VC, either a BICO, a WAMDA, or an MEVP taking a lead. And all the registered VCs inside this Venture Capital Association then chip in. And so there is a de-risking of the capital that they're trying to invest. And this way, the ecosystem is getting much more collaborative. And a unique part about the Middle East venture capital space is the government entities are predominantly backing a lot of these funds. Thus, you see a lot of stability in the funds that are being deployed and a lot more coming out to the region. There have been 2 exits in Souk.com and Kareem, which were like the crowning moment for the UAE and the Middle East. And predominantly after that, you have a lot of government initiatives around investments and things like that. So this is the landscape. If there are questions around this landscape and things like that, I know there would be. I'm happy to answer them in the Q&A section. And I've taken one VC firm, and this is the reason I'm taking this VC firm. It's like a case study for all what I have mentioned as how the VCs work. Global Ventures, it's a VC based out of Abu Dhabi and Dubai. It's run by a general partner called Noor Suede. Noor Suede used to be the chief investment officer at Dubai Future Foundation. And this is a specific need that she found in the region, that a lot of local startups never get an exposure globally. And so her focus on an investment thesis remained that our target investment spans a wide range of sectors, but what they are in common is that they are revenue generating companies that are leading in their space and immensely scalable. So what she does is look at local ventures and look at how those can be scaled outside the MENA region. And this encapsulates her investment thesis. She works specifically with B2B companies because most of their LPs look at these companies to add value as a new revenue stream for their own companies. And this is an interesting aspect of how Global Ventures is set up. In terms of how they help, if they are strategic investors, they don't actually look at just deploying capital. And this is something that you will see across the stage of a lot of VCs, where if they have invested, they would take keen interest in looking at recruiting, fundraising for you, strategizing for you, being an advisor, being a salesperson, being that network that you can tap into. So they create a bridge between East and West and bring industry veterans to work with startups and guide scaling. So we structure partnerships and exits. We are partners, the entrepreneur's success is our success. And this is almost all the VC firms look at it this way, but some of them put it up only in paper and nothing happens. But this is a VC firm that actually looks at how what they say, they actually go ahead and walk the talk. And so if you're looking at a VC firm, please don't look at it as just money that you will get and saying, thank you very much for the VC fund. No, that's not how VC funds work. The moment you get money, the money also talks. So you have a lot of people advising and helping in a good way, not in a bad way. But you need to understand the ethos around a VC firm, that they are not just giving you money, but they want to help you out. So keeping the communication open and looking at how, looking at putting forth all your ideas that you have in terms of scaling up, in terms of things. So consider them as your mentoring buddy who will help you guide and scale up in that region. They're backed by LPs like Kanu Group. Kanu Group is one of the biggest Middle East family conglomerate, and they have different verticals that they go ahead and operate. And then you have Abu Dhabi Investment Office. And this is interesting because it's also a sovereign wealth fund. And they too, I think, yeah, they too also invested into Geo platforms recently. And they are looking at how businesses can thrive into Abu Dhabi. And so this is one of their stake into what kind of investments they want to make. So if you want to go ahead and get some capital from Abu Dhabi Investment Office, they'll actually look at Global Ventures to deploy capital on their behalf. And they would also want the Global Venture, whatever startup Global Ventures invest into, to have a say in setting up their base in Abu Dhabi. And so this is also another thing which the venture capital have to manage, which is the LP expectation. And even for them, with money that the LPs provide, comes targets and metrics that you have to work with. So this is around how Global Ventures work. That's my information. You can email me at tariq.com. And I think Mr. Pervez also shared my LinkedIn around. So you can reach me out on LinkedIn. So I think I'm on time, half an hour. Thank you very much. Open for Q&A, and I'm open to answering a lot of Q&As.
Yeah, thanks. Thank you so much, Tariq. It was a great session, very precise. And maybe I'll just start with the first question. How do you see an Indian startup, getting the traction or funding from, Middle East? In fact, last year I've been to Dubai, and then unfortunately I couldn't meet you. So we found that there is a gap between. There are a lot of accelerator there from taking startups, Indian startups, to Silicon Valley. There are a lot to produce from India, to US market. But is there any platform where an Indian startup come to Middle East and either to start a business or to raise investment?
So a lot of startups that are here have founders who are Indian origin or Indian. So I wouldn't say there aren't any, and they look at so predominantly a lot of startups look at Dubai specifically and Abu Dhabi as well as and it's a very small market, so it's not a big market here, but they look at this as an entry point to Saudi Arabia market. So they come set up their base here and then they look at it. But also any investor that wants to invest, and this has been the case sadly, is they want to look at them being in their own geography. And this helps them out in accessibility and things like that. But with COVID-19 and everything has become virtual. So there is access of capital beyond these regions as well. In terms of how startups can actually Indian startups can actually fundraise, is being part of their applying and being part of their. Now they look at predominantly business models that work in the Middle East, and this is the underlining thing. So if it's working here, so there have been startups that have proven their model in India, but they haven't been able to prove their model here in the Middle East. And so the capital hasn't been able to be deployed to them. We have also seen the other way around, where startups from here fundraised and they looked at India as a market and they were not able to. So there are different business models and different ways of reaching out to this to the different ecosystems. So yeah, if they have value and they show value that they can create, then yes, access to capital exists. Predominantly what you see is there are a lot of incubators and accelerators, as rightly put by you, that look at a lot of awareness that is being created. And this is because of the government looking at how they can harness the nationals here. And so they are predominantly much more early stage or idea stage. And so there are these awareness incubators and accelerators that exist. But there are also quite a number of VC funds that exist, provided you could explain to them that the model works here in this region. It's also backed because all the LPs are from the region, so they fundraise from the region, so they're looking at how this region could add value.
Yeah. Thank you so much. In fact, when we did this Crescent Innovation Incubation Council, we found this there is a gap, and our promoters, in fact, one of our promoter, Mr. Syed Mohammed Buhari, who is situated in the Middle East. So he started in a Crescent iHub Accelerator, basically to launch the Indian startups to Middle East market, the high growth startups, because we found there is a gap for doing this. So maybe we can collaborate with more with Khalifa Innovation Center, as well as we take your experience that how Indian startups can be leveraged more in Middle East and further markets. So Nisha, can you, thank you so much, Tariq. It is very good eye opener for me also. And yeah, now Nisha, can you just moderate the question answers, questions?
Yes, sir. Yes, sir.
Yeah.
So anyway, I'll start from where you went. Our promoter, Mr. SMB sir, has raised a question. So he has asked, our early stage high growth company in energy saving areas want to come into MENA. So how can you help them?
Uh, what space?
Energy saving.
Energy space. Okay. So you have to be here. You cannot be in India and look at how you can fundraise, right? So you have to be here. Energy sector is more managed by ADNOC. ADNOC has its own venture fund that they have created. It's also knowing the right person whom you can go ahead and pitch. So ADNOC has its own venture fund that was created last October. So you need to reach out to them and see how that can work. That's one. The other element is there are smart city accelerators. There's something called a startup bootcamp that Dubai Silicon Oasis runs. So being part of that gives visibility, but that is just a launch pad. So if you're coming here and you're looking at it, so there's an annual event that happens called GITEX, and so a lot of startups come here and then they look at that specific event to get investors and get deals and things like that. It doesn't work that way. You have to be here, find someone who has been here, and then uh, use his network to actually go ahead and do that. So that's where the accelerator manager or the GP of that particular fund adds more value. The network that he brings in. So that would be the thing. You need to be here, meet the right person, and then it's fundraising is up to the two parties that are recipient and the one who is giving. So that's not our take to comment on that.
Okay. There are a few questions from Riaz. So what he's a startup from African countries. He's launching some FinTech. So is it possible to raise money from Middle East? He's an African. His startups are launched in African countries.
Okay, so you have two fintech hubs here. One is called FinTech. It's based out of DIFC. It's $100 million VC fund, and DIFC is the financial market here, and so the regulators have an accelerator, and it's situated in a place where not only you get access to capital, but also you get access to working with a lot of financial institutes. So that's one avenue that you can look at. The other avenue is Hub 71, which is based here in Abu Dhabi. It also has a fintech focus. So if you're looking at coming over to this region, understand this. There's this thing that this fund has this region has money, but you cannot just come to this region, take money and go. You need to be involved in this region. So if you're coming to this region and you're looking at raising funds from this region, show that you could actually add value to this region. And that is very important.
Okay, thank you. And Mr. Ajay, he has asked, like, for startups who were able to successfully bootstrap, so what is the advantage for them in raising VC funding?
So if you have bootstrapped, well and good, you have good revenues, you haven't yet deployed your equity. And so you have almost like 100 to 80% of your equity that you have. And so it's easier for you to go ahead and get. At the end, it's how attractive you are and to that particular VC fund. So if you have bootstrapped, well and good. Most of the, so there's a terminology that in the VC space that goes like you have to institutionalize your cap table. And the reason why you're saying institutionalizing your cap table is because most of the startups raise money from family and friends, angel investors, and things like that. There hasn't been a proper due diligence done. There hasn't been a proper review done. But when you go to these VC firms, you actually have an analyst, you actually get negotiated on your valuations, and then you come to a level where where you end up getting the investments and things like that. So that's institutionalizing your cap table. And so if you're a bootstrap startup, you have a pretty good negotiation terms, because you haven't actually deployed and you haven't actually got any kind of valuation in place. So yes.
So the next question is even earlier than them. So how can an idea stage startup raise money from VC? How can a startup raise with a workable MVP?
Okay, so if you have an idea stage, most of the VCs don't invest into idea stage. So if you're an idea stage, the best place to go into is incubators and accelerators. Now these incubators and accelerators may have some kind of tie-up with the VC firms. So here in the UAE, you have something called a Shira. Shira is a pre-accelerator where you could come over here and learn about the region, and then they make the connections to a lot of VCs and accelerators and incubators as well. So if you're an idea stage, hardly you will find capital from VCs. Yes, you might end up getting capital from angels or incubators and accelerators, which run programs and are backed by government entities or corporates.
Mr. Premji has raised a question asking, any early stage investors interested in B2C program? So if it's so what are the criteria they look into it, and all the milestones he's asked?
So for early stage B2C, so B2C is a space that a lot of e-commerce players are. So there's a very good understanding of B2C here in the region. If you're a platform, there are a lot of platform-based startups here. You have Angami, which is like a Spotify in the Middle East. So you have a lot of them here. So there's a very good understanding of their business models and things like that. So if you're coming here to raise as a B2C, my suggestion would be to reach out to angel networks. So there are angel networks called Venture Souk, Wumina, and also you have Dubai Angel Investors. And they have a much more good knack of looking at how B2C works. Most of the VCs currently have moved from B2C to B2B. And this is because of how the appetite is of this region of looking at how the family offices and the government entities or the semi-government entities can actually get value out of it. But yeah, there is hope for B2C as well.
This question is again related to what Mr. Parvez has asked. So the startup is asking the key difference in B2B business culture between MENA market and Indian, and what an Indian startup has to be very conscious when he reaches out to MENA market.
Okay, so it's been like how many years? It's been like 7 years since I've been in the India market, but let me try giving it a shot. So B2B in here is much more specific to you having, I think it's similar even in India. It's specifically you adding a revenue stream for that particular business. So if you're able to add a revenue stream to that particular business through your startup, and they end up becoming your channel and reach out to their existing players, that becomes a model that would work for B2B. Here, the competition is less and few, whereas in India, you have bigger players. And in terms of investments and things like that, it might get harder there. But here, most of the businesses, family businesses or government affiliated businesses, which have the understanding of investing into risky businesses. So this is the difference. And so the appetite of taking risk or investing into risky businesses is high here. What was the second half?
Yeah.
What was the second half of the question?
Yeah. What is that a startup has to consider when he comes into MENA market?
So as I said, one will your business model actually work in the Middle East? Look at similar players, or if you're looking at this region, how you can actually add value to this region. And it's very important. If you see this region has about 30 different dialects just in Arabic. But there is only about 2% penetration of Arabic content in this region. So what does business model change means? You being in Arabic, reaching out to specific things could be a differentiator. So looking at how you can adopt. So if you are a venue-based, you're renting out venues in hotels and things like that as your startup. If you come here and you want to do that, it's going to be tough because here most of the hotels are owned by a single player. So then you move into a model of saying, let me work with this institution, like a Jumeirah group, to actually see how I can roll this out. So your engine remains the same, but the way you deploy or the way your business model would work would change. So you would have partnership with a Jumeirah group, and then they will roll out in all their hotels rather than you going out to individual hotels and doing it. So that's how business models change. So understanding the landscape of business, how it works here, the best way to do that is to find subject matter experts who are here in this region specifically, and reaching out to them to understand how the region works on the business side. And then you as a startup should look at how your specific business model, and you need to be flexible for changes. And this is important if you're looking at moving from geographies to say how it works. So just to give you an example, Airbnb, when it came to UAE, had to get a specific license as a company to actually operate. So they had the onus of anything that happened if on the platform. If any issue happened, Airbnb was accountable. So it's very regulated in that sense. And so the talk around platform having a say and being the overarching, access to anything that happens inside the platform. Here, because it's regulated, the startup has to take that focus. So any startup that comes in this region has to specifically focus on their particular business model and see how that can adopt here.
Okay. And Mr. Abubakar has raised a question asking, does VCs only entertain a startup by giving equity, or is there any other options?
So as the definition says, VC invest only as equity. The other way they invest is also an equity arrangement, but it's called convertible note, wherein they don't gauge your valuation, but they say a future value of money, and that's the kind of equity that they would get in return. But in general, VCs, and if they call themselves VC and then they give you loans and grants, they aren't VCs. So you need to be wary of such kind of VCs who are doing that. So yes, equity is the way for VCs.
And he has raised another question from your PPT, I suppose. What do you mean by only 50 million comes from 100?
So if someone says, if there's someone saying a VC fund is about $100 million, the whole $100 million is not deployable. So they don't deploy 100 million. So you might go ahead and calculate how much they have invested into their portfolio. You'll find out that only 50 or 60 million or at max 80 million is delivered. The other 20 million that they fundraise as a fund is actually gets into the operations. So they have a legal firm, they have a GP fee, they have a space and things like that. So there is an operational budget to the VC, to the fund as well.
So we are coming to the last question. So this is out of the box, and he's asking about your opinion, I could say. So he wants to know, as for an Indian startup, what is the current situation for the VCs in investing in textile sector?
Okay, textile sector.
Exactly.
Okay, so so there are two parts to it. Let me put the current state. Currently, the VC landscape with COVID-19 is actually looking at investing into their own portfolio companies. So what they are doing is they're following on as investments so that they can, whatever they have invested earlier on startups, they can stay afloat so that they don't lose out on that money. So a lot of the VCs are actually betting on startups that would survive this pandemic and investing into them for survival. So they are actually investing money and saying, take this money for now, let's do the valuation later on, but it's an equity arrangement. That's one. Second, specifically for textile, with COVID-19, what has happened is a lot of things are going in the favor of a country becoming self-sufficient. And with Middle East, most of the things is dependent on import and export. The shift is moving towards what can be manufactured in the region and can serve in the region. So if you want to go ahead and set up a base here, not a manufacturing, but a sales, then yes, you have an opportunity. As I said, any fundraising that you want from this region, you need to show that you're contributing to this region, and that becomes paramount. Textile, I think, is more on the manufacturing. I'm not sure, are you looking at a manufacturing base or just reselling it? If you're looking at a manufacturing base, then this region would be very tough for you to come over here and manufacture because it has high cost in terms of operational cost, labor, setting up, and things like that. So my suggestion would be no. If you're looking at reselling, you need to come over here and then register and then find a distributor who you can sell. This is something you can reach out to me and I can help you, guide you, find someone who you can go ahead and do that.
Yeah, before we end the session, I'll take up one more question that just now reached us. She has asked about biotech related. So is there any incubators over there related to biotech? And could you throw some light on the post-COVID situation? So how in a VC angle, how the startups can work on that and the scope of for biotech sector? And before you answer, can you show your information here? Because people have asked your contact details also, the last sheet, if you could. Yeah, thank you.
So I think there are two questions, right? One, biotech specific.
Exactly.
Right? And can she explain a little bit more, because biotech is a vast space. So what exactly does she do in biotech?
Yeah, she wants to know what are the incubators specific over there, and second thing is like what kind of support is given to biotech related business. So she comes from a pharmaceutical background.
Oh, pharmaceutical. Okay. So what has happened is the healthcare sector, the investment into a lot of healthcare startups have increased. And so if you're in that space, there aren't any incubators and accelerators specifically for that vertical as biotech. But you could actually reach out to the existing incubators and accelerators. The ones that come to my mind are In5 and who else?
Tariq, how about Dubai Science Park?
Dubai Science Park doesn't have an incubator as such.
Okay. So
In5 actually goes ahead and encapsulates three things: technology, media, and design. So they are much more broader in terms of what they want to look at incubating and things like that. The other I would suggest is Hub 71, but they don't invest into early stage. So no, that wouldn't be the case. So there aren't any specific, like, biotech space incubator. Yeah, you have space incubator here now. It's called Gotham's. It's based out of Hub 71. So yeah, you could, if you're an aeronautical startup or a space related startup, then yes, you have a base here. But there haven't been any biotech. What you have is something called as Dubai. The healthcare authority here has created something called as a sandbox. A sandbox is a way of looking at things that are not regulated in the market. How can a government entity actually work with that? So there's a sandbox healthcare authority in Hub 71, or you call it Abu Dhabi Global Markets. It's a very good way of reaching out to them, and looking at how you can go ahead and be much more you work in the regulatory framework and deploy your services in this region. So yes, you could reach out to the Department Healthcare Authority in Hub 71. That would be an avenue. Um, to answer your second question, or what is the take in terms of VCs looking at how things are going to span out? One, everyone, no one knows what lies ahead. So that is the truth. This is I think once in our lifetime situation that we are in. But having said that, what we are seeing is a lot of countries are becoming self-sustainable. So with that, I mean a lot of uh, investment has gone from Abu Dhabi investment authorities has gone into agri-tech startups, though the soil here in the desert is not cultivable, but you have a lot of vertical farming and things like that, greenhouse farmings and things like that happening, and so agri-tech is somewhere that a lot of investment is going. So they're becoming self-sufficient. A lot of investments are getting into healthcare, and healthcare specifically in terms of ventilators, in terms of so as university, as Khalifa University, which I'm affiliated with, there are about 14 different projects that they are working on, and they are getting funding. But these are more research funds, and so the government is pushing towards looking at how they can weather the pandemic in future. So they're trying to be as prepared or as proactive as possible. Uh, and the third sector that we are seeing, or there are more as well, but the third sector that we are looking at is a lot of, so there's a lockdown, and a lot of restaurants are closed and things like that. So there's a lot of e-commerce boom, where a lot of people are not going out to malls and shopping and things like that. So everything is being delivered. And the last is the education sector. And the education sector currently is being dominated by MS Team, Microsoft Team, and Zoom, on which we are here for delivering things and things like that. I don't see anything specific that would be focused on the education sector that will work. One of the things that will work, because I also have kids, is a tool that can help parents manage their kids on their education, on their virtual education or e-schooling. So that is something that would be of interest and things like that. Yeah.
Yeah, thank you so much, Tariq. I think it's very, very precise, insightful, useful. And then I think this has set a momentum for us to work closely with you and then bring you back to university mainstream, hopefully. So, Disha, do you have any other questions, or we can wind up?
Yes, we can wind up. But one last question just now arrived.
Yeah.
She's concerned. She wants us, Tariq sir's view about woman entrepreneur doing online business.
Okay. What specifically is she into?
She hasn't raised that.
Okay.
In generic, woman entrepreneur.
So it's an interesting take here. So there are a lot of women Instagram entrepreneurs. So they have their own Instagram homepage, and they sell cupcakes to. They have their own virtual kitchen, and they have their driver going ahead and delivering and things like that. So this is on the fun fact. But in terms of founders and investing into women, you have Womena, which is specifically focused on women. You have a Women Angel Network. It's called Wayne. It's run by Lucy Chow as well. So she's also focused on that. Then you have something called as Mindshift Capital. And what we see here is there are 3 out of 5 startups actually have women founders. So yeah, women founders are a majority here. That's also to do with a lot of distractions that men have in this region. So you see a lot of women actively involved in startups.
So thank you so much. I suppose it was a wonderful session. We got a very good feedback from almost everyone. You have given a more insight about the Middle East market and how a VC works. So thank you participants for coming down, being a weekend and sparing your time with us. And thank you once again, Tariq sir, for your time.
Thank you.
I'll be
Thank you,
close.
Innovation and Incubation Council. Yeah.
Okay.
Yeah. Bye.
Okay.